Okay, so there are two main ways that you can read RSI. Okay, overbought and oversold levels. And then the second one is divergence. So if you have watched my previous videos, you already know that there's two main types of divergence. First one is called bullish divergence. Then the second one, bearish divergence. Okay, so how do you take advantage of overbought and oversold signals? So the first strategy is going to tell you when should you get out of a trade, when should you TP, or when should you scale out. Okay, so the platform I have over here, I'm using Thinkorswim. Thinkorswim provides you more features, color codes. When the RSI goes above 70, it turns green color. Can you see? Right? When it goes below 30, it turns red color. So this is the setting that I've made. You can use any color that you want. I use Thinkorswim mainly for stocks and sometimes forex. If you're a stock investor, another platform that's good for you is Bloomberg Terminal. Okay, just like you learn how to use it. Okay, so when you see the RSI is overbought over here, right? Then the price retrace. Another point over here, when it's overbought, the price started retrace. Okay, when it's oversold, you see the price immediately went up. Another point over here, when it becomes oversold, then eventually the price retraces upwards. So by the time you see the oversold signals, you would have TP'd over here, correct? When you're making a sell. Because this is a downtrend, obviously, if you have a sell signal over here based on other indicators, then this would be a good sell. Okay, so in this case, you can actually enter the trade. Because here's the thing, if you watch my past videos, you know that you need at least 3 confirmations. The first one, look at this SMA over here. This SMA act as a dynamic resistance. Then the second confirmation, you have your overbought signal. Okay, then the third confirmation, maybe you can use candlestick patterns, maybe you can use trend lines, maybe you can use support resistance. Okay, you get the point. But of course, with that said, this doesn't happen all the time. Doesn't mean that when it goes above 70, then for sure immediately it'll go bearish. Doesn't mean that if it goes below 30, then for sure immediately it's going to go bullish. Okay, this is what I call the ideal situation. Ideal situation. It doesn't happen like this all the time. So to give you another example, this is from my MT4 platform. Now some traders they use 9, some traders they use 14, but the way you use 5 RSI, 9 RSI, 14 RSI, 30 RSI, or any number that you feel that's suitable for you, the way you look at overbought, oversold signals is pretty much the same process. So what do I mean by that? When do you know that the price is about to retrace? A lot of people, they would just buy when they see RSI go below 30. So they'll buy right here or somewhere right here. Correct? What's the problem with buying when the RSI is below 30? It's because when it goes below 30, they realize something is that wait, let me wrap this off. When it goes below 30, it can stay there for a long time. Do you realize that? It produced many lower lows. Look at this low, one time, second time, third time. If you make a buy over here, they make a buy over here, they make a buy over here, it's going to add a lot of losing orders. Okay? So, when do you know that the price is going to retrace? It's when the RSI goes from below to above 30. It goes from below 30, then it shoots all the way back to the mid-range. Okay, mid-range, which is over here, which is somewhere at this point. If I'm to draw a vertical line, you can see, okay, at this point, it's when RSI go from below 30 back to the mid-range. This is when you should TP, or if you are the risk taker type, make a buy. So you don't want to go into an oversold and overbought region and then waiting for the RSI to go back to mid-range, because that wait means that you need to handle this temporary retracement. How far is the retracement going to go? nobody can predict to. So the safe way to do it is when it goes from overbought back to mid-range or oversold back to mid-range. For example, look at this overbought signal over here. You see how long does RSI stay above 70? Right? You have one peak, second high, third high. So if you make a sell over here, which a lot of people do, when they see RSI go above 70, they straight away sell. Then it's like you're selling over here, then you need to withstand this retracement. Of course, this is a small one, but then what if it's very, very big? Right? So, to be safe again, you want to wait for it to go from above 70 back to below 70, which is over here. So if I'm to draw a vertical line, you see, somewhere here, okay, somewhere in this candle. So you take profit over here rather than over here, which is somewhere here. If you have to wait a bit longer, wait for the right time to TP, you could have harvested more profits, right? And if you use this to enter, you're the risk taker type, you wouldn't have to enter into this major retracement, right? You'll be selling over here, correct? But still, you know, I don't recommend trading against the trend, because if you are selling over here, very likely the market is just beginning an uptrend, right? You don't want to get killed just like that. And also, the other thing you need to take note is the speed in which, okay, let me change this back to 14. The speed in which it goes from overbought, oversold back to mid-range. Okay, let me reiterate, okay? The speed in which the RSI moves from overbought to mid-range or from oversold to mid-range is going to matter. I'll give you an example, okay? Okay, first thing first, let me remove this line. You see the price over here at this range over here? You see the price over here at this range, okay? It is not a very volatile market environment, correct? Prices are pretty stable, volume pretty low. Look at how the RSI moves above 70. It just gradually moves slowly, then goes slightly above 70, right? So you can see the RSI go back down to the mid-range after that, then it goes above 70 again, right? But this time, when it goes above 70, it goes up really fast, right? Because of this big spike over here. And then it remains above 70 for a long time. So if you sold right here, you're gonna die, okay? If you TP it right here too, you're gonna miss out on this run of more than 132 pips. And then RSI, you can see that it went from above 70 back to mid-range very fast, faster than just now, right? Just now it gradually went back to mid-range, you know. Here you see a major spike where RSI goes above 70 really fast, then it comes back down to mid-range really fast. So which movement would be more significant? Is it the first one or the second one? It will be the second one. Why is that? Because the faster the RSI moves above 70 or below 30, the more significant it is. The higher the speed in which RSI moves, the higher the significance, meaning the more likely the price would retrace. Okay? Make sure you use RSI correctly, okay? For here, you want to wait until RSI goes from above 70 back to mid-range. Then this is the point where you should TP. So you can see later on the price went from uptrend all the way to downtrend. Of course, again, you need more indicators for you to confirm. You can just rely on RSI alone. For example, if you use candlesticks a lot, when the RSI goes below 70, you also at the same time see a spinning top, right? Over here, can you see? Telling you that price is going to retrace. So there's two confirmations right there. And also when second day comes, there's a very strong resistance over here, okay, on 1st of February, based on 29th January. So by the time you reach here, you would have known that, okay, very likely the price is going to retrace if you haven't taken your profits here. Okay, so the second way to evaluate RSI is by looking at divergence. So of course people can interpret it differently. The first type of way in which people interpret divergence is when the price is overbought over here, okay, price continues to go up, and also you see that price becomes oversold, but yet the price continues to go bearish, okay. But the way that I prefer to see it is similar to MACD, okay. For a bullish divergence, you see RSI making higher lows over here, okay, and then you see your price making lower lows. So what does this indicate? It means that the price might go on a reversal, okay, might, not guaranteed. So when you see a bullish divergence like this, it is time to TP, okay, take your profits. So when it goes from below 30 to above 30, you can TP somewhere here. This one is not so clear, it's still at about 30, so you want a significant gap or an obvious gap that is above 30, okay, somewhere here, before the price retraces, okay. So the other divergence is your bearish divergence, okay. So you can see that RSI, it makes lower highs. This one is not so obvious because on hindsight it looks like it's going sideways, but it's actually making lower highs, and then your price is making higher highs. You see that? So this is what we call a bullish divergence. So you can see that the price later on it retraces. So you will want to TP when it falls back again to below 70, which is somewhere at this candle, okay. Of course, yet again, remember that with any indicator, with any signals, it doesn't happen 100% of the time. So that's why you need to use other indicators to confirm, to increase your probability. If you use candlesticks, there's a reversal pattern over here. If you studied my candlesticks videos, and also if you're late by second day, if you haven't TP yet, you can obviously see that there's a very strong resistance. So by the time you saw that, you would have got out somewhere here before the price retraces. Okay, so some of the downsides of RSI is you already know that it's going to give you a lot of false signals, especially if you use it, let me just highlight this, individually, okay. As to which indicators you should combine it with, I'm going to cover that in the next few videos along with RSI. I'm going to give you more examples too, if you treat me nice, okay. Okay, so the second downside of RSI is that I wouldn't recommend it for entry because most of the time when you enter, you are trading against the trend. Now this is only exception if, from the example that I showed you just now, if you see an overbought signal, okay, in a bearish market, then you can consider using it to enter. Not just using RSI alone, you need to use it with other indicators. I need to say this many times. Use additional indicators for confirmation. Okay, so let me know down in the comment section below, how do you use RSI for your trading? Do you use it for entry? Do you use it to take profit? Or do you use it to cut your losses? Okay, so with that guys, I'll talk to you in the next episode. Bye.